Welcome back to Nuclear News, where we cover exactly what is going on in the uranium and nuclear energy industries, even though prices are falling, because falling prices don't really tell you anything about the space. It's more short-term price action. What matters is the long-term fundamentals. Over the last 12 months, we have the Sprott Junior Uranium Miners ETF up 25%. We have the S&P 500 over the last 12 months, 18%. Both assets are falling in what appears to be driven by a global sell-off in risk assets. Now, a global sell-off in risk assets may very well be the catalyst that forces the Federal Reserve to lower interest rates and pump liquidity into the system. What happens every single time they do that? Early stage, high growth assets skyrocket. That's why we've seen the previous uranium bull markets. It's because capital starts to get less expensive. They've debased the currency, and it's a risk-on environment. We have not been in a risk-on environment for years at this point. So if you're wondering why you haven't seen life-changing returns in certain high-quality assets, that is exactly why. So per usual, let's stay on top of the fundamentals of this space, because long-term life-changing returns only happen when there's long-term solid fundamentals. The chart comes from Encore Energy. In orange, we see the supply gap, the required new production of uranium. In green, we see the established production declining over time. And then in blue, we see some increased probable new and restarted production. This comes from some of the most knowledgeable institutions on the planet that cover uranium: the World Nuclear Association, Trade Tech, and UXC. So what they're saying is we're in a supply crunch. In the light blue line, we see the uranium spot price. What has it done recently based on the small sliver of supply gap we've seen so far? It hit $104. What will it continue to do as that supply gap is not filled, right? That is the question we have to ask. Obviously, common sense would dictate if the supply gap isn't filled, the uranium spot price will have to continue skyrocketing. So that's the long-term picture. Here's the chart long-term, doing exactly what fundamental analysts would expect it to do: skyrocket. Then we have some short-term profit taking due to short-term liquidity. What matters is the long-term contracting. Will the demand for uranium pick up? So let's stay on top of exactly what is going on in terms of the uranium supply and the demand to answer the question of if this trend will continue. Well, Yellowcake PLC, which stacks uranium, just released their annual results for the year ending March 31, 2024. So what they did over the 12 months period ending March 31, 2024 was increase the value of the group's uranium holdings by 84% to a hoard worth $1.7 billion. And so after March 31, 2024, they acquired a further 1.5 million pounds of uranium. So what this one company is doing is stacking uranium, buying millions of pounds of uranium every single year. This supply gap widens the more companies like Yellowcake do that. That's just one example of the shrinking supply of uranium. Again, the smartest institutions on the planet who study this space cannot foresee any probable new and restarted production in the future capable of filling the supply gap. So how much will demand increase? Well, this comes from the Department of Nuclear Energy summarizing what the US government is doing to spike uranium demand. Well, they have $6 billion in funding to prevent the premature retirement of operating reactors across the country. So they're extending the life of these nuclear reactors, increasing the demand. There's $2.5 billion in funding to support the demonstration of X Energy's high temperature gas reactor and TerraPower's natrium sodium cooled fast reactor by the early 2030s. So they're investing in brand new breakthrough technology that's going to accelerate the demand for uranium, billions of dollars. $1.5 billion in conditional commitment loan guarantee to help upgrade and repower the Palisades nuclear generating station in Michigan. $2.7 billion appropriated to establish and expand enrichment and conversion services to meet nuclear fuel requirements for the U.S. and its allies. $800 million to demonstrate two advanced light water small modular reactor systems. So one of the biggest countries on the planet is investing billions of dollars to increase demand. This is all brand new, most likely not baked into this chart. So that orange line expected to widen over time. Massive. Then we have over in England. Today in Parliament, Energy Secretary Ed Miliband set out next steps on a mission to make Britain a clean energy superpower. These include setting up Great British Energy, a new publicly owned clean power company, which obviously is going to invest heavily into nuclear energy. Again, the biggest countries on the planet investing in nuclear. That chart did not factor in a subsidized Great British Energy Company expanding nuclear around the world. Concrete pouring brings number of nuclear plants under construction to 26, right? Global massive expansion of nuclear energy demand. Now let's focus on what's going on with some specific companies in this space. In the US, we're dealing with the Russian ban on uranium. Obviously, causing the uranium supply to get scarcer and scarcer in the US. So Centrus Energy, ticker LEU, has scored a partial victory in its battle with the US ban on Russian uranium. The Department of Energy has granted LEU a waiver allowing them to import already committed Russian LEU for the next 17 months until the end of 2025. So massive for Centrus Energy. They're just going to be cash flowing as they import all this Russian uranium to the end of 2025. But because of waivers like this, the supply crunch in the West, in the United States, won't accelerate quite as fast, but massive for Centrus. And it's actually bullish over the long term, as Centrus was expected to get a waiver out to the end of 2027. So they have had 2 years lopped off their expected uranium deliveries from Russia at this point, right? So in the long term, we know how scarce uranium is going to get. The Russian uranium ban just accelerated it. So massive for the space. Then we have Paladin Energy saying expect the fission takeover to close in September. This is going to create the third largest uranium producer and global clean energy leader in the world. So much to look forward to for these assets.